Hey everyone, Ben Williamson here from InvestorHub, and I want to just take a minute to talk about the structure of the ASX, or almost the distribution of companies on the ASX. So rough numbers, there's about 2,000 companies listed on the ASX. I'm going to kind of ignore ETFs for the moment here, but yeah, you've got about 2,000, and then realistically you've got a very large spread and a large drop-off in values as you go down. So to highlight that, the average market cap on the ASX is about $900 million, but the median market cap is about 50 million, right? So half of all listed companies are below 50 million and half are above. And there's even a long tail in that. So 500 or a quarter of all listed companies are below 10 million, right? So it real drops away. And about 1,500, there's sort of 500 between 0 to 10, 500 between 10 to 50, 500 between 50 to 100, and then 500 above 100 mil, right? So, you know, if you're a listed company, you're sitting there at like a 60, 70 mil market cap, you're in the top half of the ASX. It might not feel like it, but you're in there. The other thing to note is I think there's quite a clear line at the ASX 300. There's kind of, you're entering index land, which has got a very different flavor to it. Once you're in index land, you've got exposure to obviously the ETFs that cover that index. You've got exposure to super funds and the like that mirror indexes or get judged against it. So they're having to work out whether they say for argument's sake, you're 1% of the index of whatever index. They're working out, am I 0? Unlikely. Am I at your weighting, or am I above or below the weighting? So do I think you're going to essentially outperform or underperform the average of the index? So you've got this kind of natural buying power from these more programmatic or quantitative buyers, as well as hedge funds and things that come with that additional liquidity. And then within that, by having more institutional ownership that is less directly investing, less caring as much, they open you up to the ability for short investors to borrow that stock and short the stock. So that's a whole nother world. Once you get in the 200 to 300, you've got all of that to contend with in a much bigger way than you do at the smaller end of the market for the majority of companies. And that is a very real reality for those investors or for those companies. But again, 15% of companies in the ASX 300 or above, 85% of companies outside of it. And so understanding this sort of long spread of companies is really important. I think it does a lot more to give context. Even if you're an 8 mil market cap stock, you still want a 500 down there, right? Like, yes, you're in the bottom quarter, but there's still a quarter of companies down there. So it's huge, huge, huge. So as you move through this, I kind of think about it in those 4 stages, in those quartiles. You've got sub 10, 10 to 50, 50 to 100, 100 plus, really 100 to ASX 300, 300 plus, right? So in those sort of 20% gaps. So have a think about that, and just have a little bit more context to where your company sits on the ASX with regards to that, because I think it's quite useful to sit in.